Hello everyone, welcome to the market opening bell for Thursday, December 18th, your 10-minute guide to the stock market. Hong Kong stocks rose under the influence of mainland markets with the Hang Seng Index opening 8 points higher. It initially fell 67 points to a low of 25,168 points before rebounding, and in the afternoon it surged 259 points to a high of 25,494 points. For the full day, it rose 233 points or 0.9%, closing at 25,468 points. The H-share index rose 85 points or 1%, closing at 8,843 points. The Hang Seng Tech Index rose 55 points or 1%, closing at 5,457 points. The total market turnover decreased to 183.1 billion Hong Kong dollars. Southbound funds net bought 7.909 billion Hong Kong dollars worth of Hong Kong stocks. Among them, net purchases included Xiaomi at 1.063 billion, Meituan at 750 million, CSOP Hang Seng Tech Index ETF at 745 million, Alibaba at 543 million, Tencent at 457 million, Yangtze Optical Fiber and Cable at 413 million, Zijin Mining at 357 million, China Life Insurance at 313 million, SMIC at 217 million, Kuaishou at 184 million. Net sales included China Mobile at 514 million, CNOOC at 132 million. According to statistics, Southbound funds have net bought Xiaomi for 14 consecutive days, totaling 13.846 billion Hong Kong dollars. Net bought Meituan for 6 consecutive days, totaling 5.57 billion. Net sold CNOOC for 8 consecutive days, totaling 1.866 billion. Technically, the Hang Seng Index stopped falling and rebounded, but the turnover shrank, which does not match the upward momentum. So it should be viewed as a technical rebound for now, and close attention is needed to see if it can hold the important support level at 25,145 points. The three major A-share indexes performed well in the morning, with gains expanding in the afternoon, closing up 1.2% to 3.4% for the day. The Shanghai Composite Index rose 45 points or 1.2%, closing at 3,870 points. The Shenzhen Component Index rose 309 points or 2.4%, closing at 13,224 points. The Chinex Index shows strong performance, rising 104 points or 3.4%, closing at 3,175 points, with combined turnover in Shanghai and Shenzhen reaching 1.8068 trillion yuan. The renminbi central parity rate against the US dollar was raised by 29 points from the previous day at 7.0573 to 1 US dollar. Copper stocks collectively rose in the news. LME copper futures have recently continued to hit new highs and are now offering at high levels. Many investment banks have raised their 2026 copper price forecasts due to a projected 260,000 ton shortfall in copper supply in 2025, which will further expand to 600,000 tons in 2026. At the same time, the risk of US tariffs on copper imports remain high. In yesterday's morning trading, spot silver rose above $65 per ounce, breaking the previous record high. Sustained supply shortages combined with strong demand from industry and investors have unusually converged to support this rally. Global surveys show that the silver market is facing a structural shortage for the fifth consecutive year, as mining output remains constrained while consumption in renewable energy, electronics, and other industrial sectors continues to expand. Macro factors also play a role. Expectation of loose monetary policy and continued compression of real yields have reduced the opportunity cost of holding non-yielding assets like precious metals, attracting funds seeking diversification and inflation hedges. Hong Kong stock market's intelligent driving concept stocks collectively strengthened on the news front on December 15. The first two L3 level autonomous driving models received entry approval from the Ministry of Industry and Information Technology and will conduct on-road pilots in designated areas. These two models are BAIC New Energy's Alpha SL3 under the Jihu Plan and Chang'an Automobiles Shenlan SL03. L3 level autonomous driving allows the system to take responsibility for driving under specific conditions, with the driver only needing to take over when necessary, which is closer to unmanned driving compared to L2 level assisted driving. Industry analysis believes that before this there were no truly mass-produced, sellable, or operational L3 models on the market. The so-called L3 licenses before were actually test licenses, allowing L3 testing on designated road sections. This time the two car companies are the first to obtain entry approval, shifting from allowing practice to allowing formal on-road operation. This marks China's autonomous driving technology development, gradually moving toward the mass production application stage. For car companies, L3 functions can enhance product premiums, increasing revenue per vehicle by 50,000 to 100,000 yuan, stimulating sales. For supply chain companies, Chang'an uses Horizon Chips, who collaborates with Huawei. Orders will surge, improving gross margins. However, short-term investments in R&D and testing are needed, with significant performance contributions expected in 2026. China Tourism Group Duty Free announced that its wholly owned subsidiary CDFG has successfully won the bid for the inbound and outbound duty-free shop operating rights at Shanghai Pudong International Airport T2 Terminal and S2 Satellite Hall International Areas, and Shanghai Hongqiao International Airport T1 Terminal International Area, with a term of 5 plus 3 years from 2026 to the end of 2033. The rental model has shifted to a monthly fixed rent plus sales commission hybrid model, replacing the previous guaranteed sales commission or actual sales commission, whichever is higher model. Before the pandemic, the airport expected over 41 billion yuan in rent over 7 years, but the new model focuses more on sales growth, encouraging operators to offer concessions to consumers to expand the market. This bid strengthens CDFG's layout in first-tier airports like Beijing and Shanghai, already operating Beijing Capital T3, Hainan, etc., while also ending Sunrise Duty Free, Shanghai's 26-year dominance at Shanghai airports. Sunrise Shanghai was originally controlled by CDFG, about 51% equity, but CDFG chose to bid directly this time and required Sunrise to withdraw from the competition, leading to Sunrise exit. The other segment, Pudong T1 Terminal and S1 Satellite Hall, was won by global duty-free giant Dufry, marking the first large-scale entry of a foreign duty-free operator into China's airport duty-free market. Shanghai Airport Group's public tender this time emphasized that Segment 1 and Segment 2 cannot be won simultaneously, aiming to avoid single-branch monopoly, introducing competition to enhance operational vitality, but it may also lead to involution, price wars compressing profits, shifting the industry from high margins to scale-oriented. For markets watching today's U.S. inflation data, with U.S. stocks closing lower across the board, the fear gauge VIX index rose, VIX index rose 1.14 points or 6.9% to 17.62 points. The Dow opened higher but closed lower, evaporating an early 273-point gain, ultimately falling 228 points or 0.5% to 47,885 points. The S&P 500 index also closed down 78 points or 1.2% to 6,721 points, marking 4 consecutive trading days of declines with the Dow. The Nasdaq fell 418 points or 1.8% to 22,693 points. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, fell 54 points or 0.7% to 7,501 points. AI stocks face another sell-off with reports that Oracle, Michigan data center plans are uncertain, causing its stock to fall 5.4%. Broadcom also fell 4.5%. Nvidia dropped 3.8%. Tesla, which hit a closing high on Tuesday, gave back 4.6%. Apple and Meta fell about 1%. Warner Bros. Discovery stated that its board rejected Paramount's $108.4 billion hostile takeover offer, mainly because the latter failed to provide sufficient financing guarantees. The company said it has not yet set a date for shareholders to vote on the deal, but expects the vote in spring or early summer. Warner Bros. Fell 2.4%, Paramount dropped 5.4%, Netflix rose slightly by 0.2%. This year's largest IPO medical supply supplier, Medline, debuted on the U.S. market, opening at $35, about 20.7% higher than its IPO price of $29. Medline issued 216 million shares at $29 each, raising $6.26 billion, making it the top fundraiser among U.S. new stocks this year. Micron Technology announced that for the first fiscal quarter ending November 27th, earnings per share were $4.78, higher than the market's expected $3.96. Revenue reached $13.6 billion, also above the expected $12.9 billion. The stock rose 5% after hours. The company expects revenue for this fiscal quarter to be between $18.3 billion and $19.1 billion, with a midpoint of $18.7 billion, higher than the expected $14.3 billion. General Mills announced that with strong demand for packaged foods, sales for the second fiscal quarter ending November 23rd were $4.86 billion, higher than the market's expected $4.78 billion. Adjusted earnings per share were $1.1, also beating expectations. The company reaffirmed its full-year outlook. The company stated that it maintains its annual profit decline forecast of 10 to 15%, an organic net sales growth expectation of 1% to a decline of 1%. U.S. President Trump stated that the U.S. will prevent sanctioned tankers from entering or leaving Venezuela, combined with a 1.274 million barrel drop in U.S. EIA crude oil inventories last week. Oil prices rebounded. NYMEX January crude rose $1 or 1.9% to $56.27. Brent February crude rose $1 or 1.8% to $59.92. Our stock pick today is Yixin Group, stock code 2858. Yixin Group is primarily engaged in auto transaction platform business and self-operated auto financing business in China, according to the latest data from the China Association of Automobile Manufacturers and the China Automobile Dealers Association. Total sales of new passenger cars and used passenger cars in China grew by approximately 11% year-on-year in the third quarter of 2025. In addition, new electric vehicle sales in China showed continued growth during the same period, with a year-on-year increase of about 11.8%. In the third quarter of this year, the group's auto transaction volume covering new and used cars increased to approximately 235,000 transactions, up about 22.6% from the third quarter of 2024, outperforming the market growth rate. The total financing amount in the third quarter of 2025 reached 21.2 billion yuan, while the group's used car financing amount surged 51.3% to 12.1 billion yuan, demonstrating the continued success of the group's proactive strategies through more precise risk pricing and the introduction of profitable used car products. As a result, the proportion of the group's used car financing business in the total auto financing amount reached about 56.9% in the third quarter of 2025. Among this, used electric vehicle financing amount to about 1.5 billion yuan, accounting for approximately 22.5% of the new energy vehicle financing total in the third quarter of 2025, compared to about 13.1% for the group's used electric vehicle financing in the new energy vehicle financing total in the third quarter of 2024. The group's financial technology SaaS business also maintained rapid growth, facilitating a financing amount of about 11.4 billion yuan in the third quarter of this year, a year-on-year increase of 102%, with its contribution to the total financing amount rising to about 53.7%. In addition, the group's cooperation with two new financial institutions went live in the third quarter of 2025, further expanding the network influence of the financial technology platform. Furthermore, the group continued to strengthen and expand its cooperation landscape with auto brands, establishing partnerships with two well-known electric vehicle brands in the Chinese market in the third quarter of the year, aiming to provide services to a broader range of automobile manufacturers. The battery gap product launched by the group in 2023 continued to grow rapidly, recording about 22,400 battery gap transactions in the third quarter of 2025, a year-on-year increase of 48.8%. The group's artificial intelligence strategy is advancing as planned, with steady progress in the deployment of Xcore in the third quarter of this year, which is a new product designed specifically for the pre-financing stage. The group expects that Xcore and other artificial intelligence products for the pre-financing stage will significantly improve efficiency in online marketing, document processing, and customer management during the credit application process. These products can also enhance conversion rates and improve customer experience through highly automated interactions via instant messaging and intelligent voice. The group anticipates that the agentization of pre-financing, including the deployment of Xcore and other artificial intelligence products, will be fully completed by the end of 2025. Recommended buy price is $2.8, target $3.1, stop loss at $2.65. I do not hold the above stock.